Welcome back, folks. Dow's up 713, Nasdaq's up 329, S&P's up 76. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. In order to get the opening call, real easy to do, folks. You come over to our website at TFNN. You're going to go into newsletters. You're going to hit the opening call. You're going to be riding that wave. Bottom line, Basil, every trading day, comes out with a great newsletter. Also has a bunch of archives on the website. You get the newsletter. You're going to get the archives with it. You can get it for 1 month for $128. You can get it for 6 months for $595, which is a savings of $173. You can get it for a year for $995, which is a savings of $541. They all come with a 30-day money-back guarantee, folks. Everything to win, zero to lose. You get maybe, my take is that we at lows in the market. Bottom line, ride that wave, man. Get that surfboard out and ride that wave, Basil.
Hi, Tom. How are you doing? And certainly a great day for you, the green day, right?
Hey, you know, Basil, you know, I was telling the story this morning, right? Do you remember, like, oh, my God, this is like 17 or 18 years ago now. Every time I get on a plane, folks, okay, you know, of course, I'm a bear most of the time, and I'm a raging bull right now, by the way, folks, okay? But the bottom line is that I get on a plane, the market will go down. I'll never forget whether it's maybe 15 years ago. I got on the plane, and we're all in the gold market. I was going up to visit my account at 60 State Street, right? I walk outside. It's St. Patrick's Day, folks. The gold market exploded topside. Hey,
you remember that was it happened specifically twice. There was also one time where the gold stocks had just done nothing right up until St. Patty week.
I know, man.
And on the very day, right there, it was just, and you were saying green is going to, everything turned around. All the gold stocks, really, it's remarkable how that happens.
Crazy.
So, yeah.
So let's ride the wave now, though. Let's ride this wave.
We're looking at a little green right now. This is going to be very interesting in terms of sentiment indicators. In terms of, I always look for that leg D to the downside as well as the upside. In this case, we've got leg D. That's the fourth highest trough in this case, fourth lowest. And the fourth highest trough was the 29,568 high at peak D in the weekly chart. Turns out we've also got that fourth highest peak in the monthly chart at a leg D. I have to wait till the end of the month. Although it looks very obvious, but I have to wait for the end of the month before I can put the down arrow and say that it's made a peak D. Now, what's really important about this particular phase, if I said to you that the sentiment indicators, where do you think the sentiment indicators are in relation to the huge worldwide financial crisis of 2008, not when the low was made in the market, but the actual crisis. Remember that whole period in October.
Sure.
So if I said to you, where do you think the VIX would be? It was at 89 back in October of 2008, and that was after months of terrible activity. And then we just had Lehman. We had literally all major countries.
That was that weekend.
Major financial.
That's right. Yep.
And it was horrible. And if I said to you, where do you think the VIX is? Where do you think it was this morning?
Well, I can see a chart. It was over 80, evidently, right?
84.83 and 89 right here. We've got 89.53 was the. So we are factoring in at this particular time a crisis. This is not something that's already been unfolding for months. This is something that really the talk of a crisis has been pervasive for about, let's say, 3 weeks. You can even give it 4 weeks, but it's about 3 weeks. What we're looking at is that the sentiment, and this is the fear gauge, has spiraled to a point where it is the equivalent of where we were back in October of 2008. So on that basis alone, my suspicion is that we're looking at some kind of volatility index top forming, but tops are very interesting because that October top of 2008, that was at 89.53, but it wasn't until 2009, March the 6th and March the 9th, that the S&P made their lows, And that volatility index wasn't even close. When it did spike up, I think what was that? I think that was in May. There was a sudden big spike once again.
Yeah, May went to 48, right.
Right. So we went to 48. So as I'm looking at it, I'm saying, okay, one of the big factors for me is to look at how the volatility acts on. I like to look at the weekly charts, so let's give it all the way to Friday. But at this particular point, and I had a call this morning from someone who traded the volatility index, did very well, and said, what do I think? And I said, you've got to be ready now for the VIX to pull back, but it won't pull back in a great hurry unless the market spirals to the upside 4,000 or 5,000 points, which it probably isn't going to do at this point. But keep in mind that this is really extended. So that's the volatility. And the TVIX, which is 2 times, went from the 38s back on, I think it was February the 12th, to today's high of 653.88. From 38, that's almost a 20 bagger. I mean, this is so. When we're talking volatility, that's one of the things I look for.
That's crazy, man.
You wouldn't have believed it if I said to you, if I had to ask you, where do you think it was 38 5 weeks ago? You'd say, oh, it must be maybe 130, maybe 650. Now at this particular point, it's 600. So to me, that's a sentiment indicator. It doesn't mean that everything has to turn around, but it does mean the fear factor is so high that it should come down. It doesn't have to come down just all of a sudden. It's at 300, but it should be pulling back. So that's number one.
Oh, yeah. That can gap down $150, though.
Earlier in the day, it actually had. But I'm just saying that because we don't have an end in sight to the coronavirus issue, and this now has become a financial and economic issue.
Right.
Because I mean, people are losing. People have. I mean, I'm getting
it's heavy.
Stuff. People are. This is serious stuff. So
it is.
The other thing I'm looking at is that bonds. I always look at it. It's not 100%, but most of the time when the market starts to pull back sharply, bonds rally, and because people go into bonds as a safety factor, and then when the money comes out of bonds, it goes into equities. But look what's happened. We've gone to 170. This is unbelievable as well. But 179.70 March the 9th, and now we're trading at 154. That's a 5.5% pullback just on the day. That says to me that we're probably trying to find some kind of a base in the market. So I consider that 20,000. It's not just psychological, but I think on a technical basis between 20 and 19,000, we hit 19,882 this morning. This is an area that I think we're going to try to form a platform and start to have bounces. And the pattern that I often talk about is the lowercase h pattern, where you come down sharply. You can see one right here. You came down, you went to 24,681 on the 28th of February. You bounced up to about 27,100. And within 6 days, you're 3 days up and 3 days down. Then you take out that left side low. It looks like a lowercase h. So I think that we are trying right here to form some kind of a tradable balance, and some stocks are beginning to look very interesting for subscribers. Oh, and the dollar is just about making a double top right here.
And folks, really easy to get Basil's newsletter. Come over to our website at TFNN. You go into newsletters, you see the opening call right there. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Stay right there, folks. Come right back.